Interesting. So our model says revenue will be 48 billion. But, our model has some error bounds. Could be as much as 52. So it sort of centers around 50, which is pretty much what I think people expect. The consensus is actually 46. So it's saying 48. So that seems reasonable. Next quarter, it's saying revenue will be 51, which would be below consensus. But it sort of has this, it's got this weird band where it goes from, okay, well, let's look at the average. On average, it's 46%. So I suppose I can use that as the average. In which case it's 55, which is a huge beat for this quarter, and then 58, which is a big beat as well for next quarter. But it's been trending a little bit down on the predictiveness. So I think it's been 5 quarters in a row where this model is dropped a little bit. And again, maybe I have to add more players like Nebius, or who else is buying these things right now? Governments? I don't think so. Yeah, of course, Paravlo, yeah. But now you have to sort of guesstimate. I mean, it's almost better to put it in the model than it is to not put it in the model, but it's hard to say what to do exactly. I will say, one of the things I can adjust here is XAI. You don't spend the capital you get as soon as you get it. So that's probably something I can adjust. Usually you sort of spread that out. So let's see, XAI has raised 6 billion there. So I assume they spent 3 and 3, which is probably not right. They raised 6 there, so they raised 12, and then they raised another 10.3. So that's 22 they raised. And I have them spending 32, which is obviously not exactly right there. But let me do it a little bit differently. Ah, yes, this makes the model fit better. Okay, that's still too much though. Maybe try this at 2,000. Still too much. Oh. Okay. So that's about right. Okay. So this sort of makes the model fit a bit better. Average is 47. So 55 and 59. But it would have said, let's see, what would it have said for last quarter? It would have said, if you take the long-term average of 47, that would have under, let's see, let's try that. 47. Yeah, that would have overestimated revenue by quite a bit. This is our forecast. And let's do the difference. guess that, I did it as well for OpenAI because OpenAI is going to spread that money around as well. OpenAI raised 10.6 there and then 40 there, but it's not all going to capex right away. I mean, that's just not how the world works. So what I can do is I can take this 10 billion and spread that as 2 billion a quarter, and take this 40 billion and spread that as maybe 8 billion a quarter. Maybe even less, because I know they're not getting all that money right away either from Masayoshi-san. So maybe this is more realistic. The average doesn't change, interestingly, but it does smoothen this quite nicely, where this is extremely predictive. I'm doing a little curve fitting here, which is never good, but well, it's 45 is now maybe the most accurate way to do it. It's hard to minimize it all. Sometimes you do get like special orders that you don't anticipate. Okay, well, the model says they're going to blow out by a lot. Let me tweak a little bit more. Let's go down to 43% predictive. That's still a big number. So that's 51 for this quarter, which would absolutely knock everyone's socks off. And 56 for next quarter, which would also knock everybody's socks off. A little less so, but yeah, I don't see how you... Now, stock's gone up a shit ton, so there's probably a lot of expectations in there already. I think maybe you sell the vol. Let's look at some of the Wall Street estimates. So you go in Godel, type in RES, and here's the type in Nvidia in the corner there, and I see the Morgan Stanley. Let's start with the B of A preview. So here's Bank of America, and now the H20 saga is a big deal, obviously. So let's see what these guys said. This is Vivek Arya. Q2 sales beat 47 versus 46 consensus and 45 guide on continued ramp of Blackwell, robust cloud growth, and robust cloud spend. So he's saying 47, the guide was 45. That's pretty much what everyone, I think, thinks. So if they come in at 48 or more, which our model suggested will come in at more, that'd be a big deal. He thinks they raise for Q3. He's got 54. That's a little bit more, in line with what I'm thinking. So a little less impressive. But again, the H20 was supposed to help out there. I'm not really including any H20 or any kind of China at all, but I'm sort of interpolating it. So Blackwell Ultra, is that like the B200 volume, or is that B300? Volume ramp adds on top, potential reach 57 to 60 if H20. Yeah, I think that's right, but no H20. Yeah, implied move for Nvidia is so low that it's hard to short it. Short the vol. I don't know how much H20 they got to ship in either. I guess they said $10 a share in earnings power over the long run. I don't know how they got to $10, but this is their model. That was last quarter, maybe. So Blackwell Ultra has a little bit of a higher price. H20 is a low price. Okay, so B of A, pretty bullish, but that's kind of what everyone's expecting. Let's check, let's see, Morgan Stanley. Well, Nvidia's mispriced because it's gone up. It's doubled, so it's definitely mispriced, 6 months ago. Supply is what matters on the night of the earnings call, but demand is what sets the path into 2026. Expectations have risen. We expect strong quarter and outlook, measured on the current quarter. Optimism centers on what lies ahead. Demand has improved continuously through the quarter, but supply remains the gating factor. That makes predicting revenue between now and year-end a function of the magnitude of the Blackwell ramp. And we do expect October to benefit from acceleration of Blackwell shipments. We raise our estimates for October, but more so for January in 2026. Demand side, remarkable, insatiable, massive. Surge in inference demand, challenging to install capacity to meet it. CoreWeave has a bigger capex ramp than maybe I thought. So yeah, it's the GB300. Rack assemblies picking up on high, guiding for Q3 rack shipments to triple versus Q2. Our China hardware team estimates rack builds from the top 4 players to roughly double in Q3. That's even with the slowdown at Wistron as they migrate production to Mexico. Yeah, we've been bullish on Nvidia for, I don't know, 2-3 years. We said it was the first $10 trillion company when it was $500 billion. So far so good. That's a 10x almost. So pretty mispriced. I'm not sure I think there's still an underestimation of AI, to be honest, even though people talk about it like crazy. Not sure people fully understand just how crazy it's going to get. This is a much better preview note than Bank of America. I didn't say much. But Morgan Stanley is a pretty good Asia team. Lead times for advanced testers have come down. KYEC tested B200, B300s and expects 50% growth from Q2 to Q3. Wow. Oh, they did recognize 4 billion of H20. H100 production has stopped. I think Nvidia is still undervalued. I don't think I'll trade it, but thanks, AR. If I had to trade it, I'd probably be long. The Google spend is really, really huge. And the assemblers and the testers are still constrained. Yeah, we'll see. I mean, if you checked out Google's latest image products, it's pretty amazing. So Google needs to buy more for that demand. Google's demand is going to continue to increase. They just launched a really good image model. Really fucking good. So I think that'll probably drive a little bit of success. Godel Terminal is the financial information terminal that I created to make a more accessible version of some of the advanced financial terminals that are only available to Wall Street professionals. But we're also making some really cool new tools that even Wall Street professionals are buying. So it's definitely an interesting product. I'm having a lot of fun building it. Okay, so yeah, Nvidia, again, no reason to be involved really. But probably would be long. Again, the only thing that gives me hesitancy is the sheer, kind of I don't know, the sheer bullishness usually kind of results in a bit of a headwind to continued rallying.